Morning, everyone. Thank you for joining our session. The session is on digital financial economy. And my name is Andrew Tesha. I am the co-founder and chief executive of A-Trader. So this session has been co-organized by A-Trader, Fikia Finance, and Iconic Spaces. So one of the most important developments, in my humble opinion, in my lifetime at least, has been the development, for pretty much any human being, I think, on this planet, has been really the discovery of this thing that we call the internet. It's huge. And right on the heels of the internet, came the discovery of what we call the mobile phone, or what is called cellular telephone in some other parts of the world. So what that has done to the world economy, and what that has done to the ability of literally any individual to really harness the power of the internet, harness the power of the mobile phone, to be able to create, to be able to innovate, to be able to earn. It's been really amazing. And when I stop and consider that these are developments that have occurred, pretty much within my lifetime, it's really been something amazing to experience. It's been something amazing to watch, and to be a part of it in a personal and professional way has also been really exciting. So today, ladies and gentlemen, we have some great minds to dig deep into what has been born out of the internet, into what has been born out of the mobile phone. And that is something that we refer to as the digital economy. The companies that are changing the way we live, the companies that are changing the way we interact with money, and what in this session we'll refer to as the digital financial economy. So without further ado, I'd like to introduce our panelists. We have Jalal ul Haq, from the Deputy Chief Executive of Finca, who has developed some very interesting financial products through Finca. We have Irene Kiwia, the founder of Ecobar, and they're creating a pathway for communities to be able to do digital savings and investments. We have also on the panel Mwendeche Masima, who is the founder of She Ministry, an expert on digital government. She's studying digital government for a PhD, and she's going to be here to give us some really great insights as regards that. We also have on the panel Mr. Patrick Mususa, the Executive Director of Tanzania Institute of Bankers, and last but not least, joining us on the panel all the way from the Bank of Tanzania is
Andrew, I think you've cut off a bit, but he was just about to introduce Dr. Emmanuel, who is representing the Bank of Tanzania. Yes.
Thank you very much, Diana. Yes, Dr. Emmanuel Mugongo from the Bank of Tanzania, who is the senior principal economist there. Thank you guys for joining us, and I will now hand over to Ben and Diana. Karibuni sana.
Hey, thank you so much, Andrew and your team, for having us, Iconic, A-Trader, for giving us the platform to share, to learn, to grow together this beautiful morning. I will be your co-moderator for the session today, alongside the amazing Ben Oden. He's just switched off his camera and I am hoping he's back. And just so you know, if you feel comfortable turning on your video, it would be great to see your faces and interact. But if you're not comfortable, that's also very much okay. So I'll take you through some of the logistics here today. So in case you do feel that you want to engage, there's a chat that you can type in any question or comment at any given time and we'll respond to it. But also you can raise your hand if you would prefer to speak instead. We also have basic rules around the code of conduct, especially that we're now in the digital space quite a lot. We really want to disclaim that we do hold dear privacy and data. So for whoever is not comfortable that even this session is being recorded, just do feel free to notify us, because we do want to make sure that you feel safe and that you can engage in a very inclusive manner. So I'm going to take you briefly through some of the things that you might want to consider as a participant on the other end in terms of the code of conduct. Just reading the basic ones, that you do recognize that you have a right of freedom of expression, and you can feel free to state at any time, that you will treat others with respect, dignity at all times, that you're going to behave professionally, respectfully, and be culturally sensitive towards other people, that you'll promote the principles of respect, diversity, and inclusion, that you'll prevent and not engage in any abusive behavior of any kind that leads to harm, prejudice, discrimination, or harassment against any person within this session, and that you recognize that your duty to report any violation or potential violation of the code of conduct that we've just mentioned today, that you can feel free to reach out to us, the organizers, but also text privately. So we want to welcome everyone to really fully engage and be part. For our panelists today, we're going to be holding two cards. The yellow card, which says, hey, fair warned, your time is almost up. And when I do raise the red card, please know that the time is actually up, and then we need to give the mic to the other person. But super, super excited to have everyone today. Irene, Patrick, Mwendeche, Dr. Emmanuel, it's a pleasure, and we're looking forward to learning quite a lot from you. Over to you, Ben.
Thank you, Diane. Good morning, everyone who's just joined in. I think those of you who saw the promotional material, the discussion today will be about digital finance and how is this emergence of digital financial solutions helping us get towards an economic revolution as a country. And so the big question we're asking today is, how will the emergence of digital financial solutions driving Tanzania's economic revolution? And I think Andrew did a wonderful job of trying to define the digital economy, digital finance at the beginning. And I think I'll just try to recap that for everyone, and then I'll ask the first question. So the digital economy is, refers to an economy that is based on digital computing technologies, computers, phones, and the transactions that happen in the digital space. And digital finance is financial services delivered through mobile phones, personal computers, and the internet. So I think in our local context here, we have mobile money, people do internet banking and whatnot. So that's the definition. And so that's what we believe digital economy and digital finance is. So the first question would be for our panelists is, what is your understanding of the digital economy and digital finance? And what are you currently doing in your organization driving this migration to the digital space? So this goes to everyone, Mwendeche, Patrick, Irene, and Dr. Emmanuel from BOT. So what is your understanding of the digital economy and digital finance, and what are you currently doing, whether in terms of developing products or pushing for policy in your organization and institution to migrate and to be a part of this digital revolution? Karibuni. Patrick, I think you can start.
Thank you, Ben. I believe you can hear me?
Yes, we can.
Thank you for the opportunity to go first. I do appreciate that we're in yet another industrial revolution, which now is based on technology, and quite a number of economies around the world have advanced adopting through the adoption of digital computing technology. The importance of it for me is unlocking the potential in such a big country like ours. We have the potential to be a much bigger economy than we've so far achieved. We've made strides over the years since independence. To some extent, we've adopted technology to improve efficiencies in several services, public services. Private sector has grown. If looking at the financial services sector, where my institution, TIOB, operates, we've seen the contribution of competition in the reforms that the government has introduced since 1993 and continues to introduce to promote innovation within the financial services sector. Key examples can be the transactions now that you can do between banks, the overlap between, or rather the congruence of services that you can get on multiple platforms, being able to have various choices in terms of who you want to bank with, how you want to pay your bills, how you want to save, which insurance products you buy. And this actually has contributed to some extent the natural process of learning for the general public. A member of the public using their mobile phone can easily start getting, messages that tells them what services are available from their network provider, their telecom company. Very soon after that, they get approached by a bank that opens up an agency in their neighborhood. And thereafter, if they visit that agency, they start getting SMSs from that bank. And now they start getting more educated about the services that they can actually use. So financial literacy and education is spreading as a result of the adoption of digital technology in the financial services sector. And I see a huge potential. For my organization, I think the same technology can be leveraged to improve the speed at which, or rather the efficiency with which education is accessible. It's specifically education in financial services. And not only just for the general public, but also the financial intermediaries, meaning the bankers that work in banks, financial services, financial institutions, and their employees. They also could benefit significantly from learning how to adopt the same digital technology to ensure that they are facilitating the transactions that support the growth of the economy. So small businesses, being able to educate them better, making knowledge accessible to them. It requires empowering financial intermediaries. So from TIOB's perspective, I believe that the digital economy can be harnessed through also active initiatives to improve access to knowledge, access to information, information about services available, information about markets, information about consumer groups, women and youth. How is the dispersion geographically? How is the dispersion in terms of income? Getting that level of understanding in terms of the data available and making it more accessible to the decision makers is something that it can be leveraged to ensure that the digital economic growth is achieved in Tanzania. Those are just my thoughts initially.
Thank you, Patrick. I like this push for increasing the level of literacies, and I think that's something that we'll talk about a bit later on. But thank you so much. Maybe Irene, you can go next.
Thank you. Good morning, everybody, and thanks to the organizers for this opportunity. For me, the digital economy captures digital technology and focusing on how production and consumption takes place, how goods and services are marketed, traded, and paid for. And it's very inclusive and it's grown, and it includes different ways, different sectors leverages technology, in terms of markets, business models, day-to-day operations, and how economies are transformed. So it covers traditional technology, media, telecom sectors through payments, and it includes e-commerce, digital banking, and varied sectors like agriculture, mining, manufacturing, and how all of this includes application of technology. So in what I do with Ecobar, what we're trying to solve is how the informal sector in Africa access financial services. The reality is over 70% of the African population is in the informal sector. And not only are they in the informal sector, they are also underbanked and underserved. And when you look further into this economy, you will see that most of them access financial services through community savings platforms. And this varies, in some markets they're structured, in some markets they're unstructured. In Tanzania, for example, we have Ecobars, which are more structured community savings platforms. You have the merry-go-rounds where people save and rotate who takes the money every month, and the model is varied. But the reality of the matter is for people to access finance, they have to come together, contribute in one pot, and then leverages the strength of their contribution to access finance. And most of the in this particular savings economy are women, so it's a very much women-led. And when you look further, they're in agri-value chains, That's why we keep hearing and we're seeing that agriculture is a backbone to not just the Tanzanian economy, but to many sub-Saharan African economies. So what we're doing with Ecobar is to digitize community savings groups. I mean, it's a massive, massive opportunity. There is a lot of limitations to data. So not any country today is able to tell you for sure, the value of their informal sector or the value of their community savings economy. So it's massive. So what we're doing is we're providing a platform called Ecobar to digitize community savings groups, which means members of community savings groups are able to have their digital KYC and have a digital financial footprint, because the platform also records the transactions that are done through the platform, the community savings platform. Yeah. Thank you.
Asante, Irene. That's wonderful. Wandeche, maybe you can go.
Sure. Good morning to everybody, and thank you so much to the organizers for giving us this opportunity to learn and interact. So from my side, if we look at digital economy, it's basically any economic activity that basically uses digital computing technologies. So we look at the internet, we look at big data, cloud computing, fintech, and other technologies that use or that collect information, that analyze information, store information, and share all the information with via digitally. So when it comes to digital economy, it is basically an economy that is based on digital computing technologies. And from my side as an academic, it's not on the implementation phase, but more on the research phase. So what we're doing is we know that where the world is going digitally, especially in the likes of Tanzania, and we're concentrating on what factors would impact people to actually move into this transition, because we can get many policies and other companies that give financial services, but you cannot force somebody to use those financial services. So from our side, we just want to see, we see where the world is going, but what is it that as Tanzanian citizens would use to, what would they need, or what, oh, I'm so sorry. I'm so sorry, everybody. Basically, as Tanzanian citizens, what factors would they need to adopt these digital services, and as we're going with digital technology? So from our side, we're just, before the implementation phase, we're researching on how to motivate people to use these digital services. Thank you.
Asante Wandeche. Dr. Emmanuel, karibu.
Thank you very much for inviting me to this session. Maybe as the Bank of Tanzania, our principal role in the digital space is to ensure stability. Stability in the sense that we are responsible to ensure that the innovation is harnessed in a way that arrangements are in place to mitigate potential risks. And the risks are considered in two dimensions: from the supply side, to ensure that the financial service providers remain stable. So you know that the Bank of Tanzania has a regulation or has a law which provides oversight for all payment service providers. And this includes players in the digital payment space. In the side of demand, we have consumer protection regulations, because we need to protect the consumers who are participating in this space. On the other hand, Tanzania being a developing economy, we are also involved in the developmental role in promoting development of the payment system, of the financial system, and the payment system in particular. And in that regard, in Tanzania, we have a 10-year development plan. It's called the Financial Sector Development Master Plan, which was developed jointly with the key stakeholders in the financial sector, in the financial system, led by Ministry of Finance. And the Bank of Tanzania was a part of drafting this 10-year development master plan, financial sector development master plan. And the key pillars which relates to digital space is that one of the pillars, it promotes inclusive finance. That's where those solutions which are bringing in people who are not in the system is encouraged. But also there's a pillar on consumer protection, protecting consumers. But the third pillar, which is also related to digital space, is the financial system integrity in terms of mitigating risks arising from money laundering, as well as cyber security. So Bank of Tanzania is actively involved as a regulator, at the same time is involved in terms of promoting development in collaboration with the financial sector stakeholders. And through their respective associations, we are also working closely with financial service providers, particularly banks through Tanzania Bank Association, and the telcos through their associations. So in a nutshell, that's how Bank of Tanzania is involved or is participating in supporting this revolution. Thank you.
Asante, Dr. Emmanuel. And actually, I love the fact that we have quite a diverse panel. We have someone who's reaching the formalized sector, and then we have someone who's reaching informal markets. We have someone from the research angle and regulation as well. So thank you so much for all your inputs. Over to you, Dan.
Thank you so much. Thank you so much. I think we had someone else from Finca, right? Or
yes, Jalal here from Finca.
Yes.
Hi.
Yeah, you're welcome. Yeah, so thank you so much, panelists. Like we mentioned earlier, that we are going to maybe slightly even be tweaking the the rules of the game here to probe further into what you've just shared here today. And I'm really wondering to Dr. Emmanuel, here, you did just mention right now that the role of BAT is to ensure stability. So risks oversight, consumer protection, etc. Is there also part of this whole framework a support for a conducive environment? Take an example of M-Pesa and where it started and how it started, the vision behind it all. and even how it has become, Africa's or the world's biggest fintech initiative. What is the role of BOT in making sure that new innovations in the fintech space are actually embraced and mainstreamed, as with the case with M-Pesa, which maybe probably when it started, there was a lot of, is it going to work? Is it going to create impact? But now it has stood the test of time. What's the role of BOT when it comes to conducing and actually allowing adoption of new innovations?
Yeah, thank you, Diana. The Bank of Tanzania has multiple ways to support innovation. One is to provide regulations which are open to accommodate innovation. For example, at the moment, Bank of Tanzania is encouraging fintech through working with particular startups. They can work with through financial service providers which are regulated by banks. Because the model we are using, the Bank of Tanzania, is that those startups, they can reach out to a licensed bank or licensed mobile money provider so that they can explore the solutions they want to bring to the market. And so the interface will be the regulatory or licensed financial service provider linking up with the Bank of Tanzania, coming up with a proposal which they've collected from those startups. So the Bank of Tanzania is open to support innovation, but we are using, our model is to use the regulated financial service providers. Thank you.
Yeah, thank you so much for that response, Dr. Emmanuel. I'm sure we'll get back to you later on. We still have tons of questions, but we also welcome everyone else in the discussion here today to please post your comment or a question. You can direct it to whoever you feel in the panel that can respond to you, and then we'll read it and be taking it on later on. I'm really quite curious to learn. There's already quite a lot going on. There's a lot of wishes from what I've heard from the different panelists, that probably improvement of access to information and the knowledge could actually move us closer to bridging the gap. But what are the different drivers and I guess barriers that are stopping us from getting into a digital finance ecosystem? What are the existing challenges that we see here today or in your spaces that you're working in that might be hindering that transition from happening?
Hi, Diana. So, and members, if I may take the first response to this question, challenges that I see hindering this adoption of digital financial solutions that can drive the economic growth. Well, I would like to put it in this way. It's not so much an occurrence or an event or an entity, but so much so the competing factors that exist around the whole concept of digital innovations. If you look at it in terms of a more objective approach, you are looking at digital innovations at the same time as the increasing relevance of cybersecurity and incidents of hacking, information thefts, holding ransom whole financial institutions, so much so that they now provide provisions in their balance sheet for currencies like that, where they actually pay ransom in order to have their systems released so that they can keep serving their customers. You have other competing factors, such as within the context of a developing economy such as this, where you're trying to push for financial inclusion. On the other end, you have a regulated environment, which is trying. However, because of some of the standardizations that need to happen in order to be able to understand your customers in their specific segments, in order to streamline product development costs and make sure that you're doing business in a cost-effective manner and not actually generating a loss as a bank, you now struggle to create products that can match the needs of your customers 100%, so that you might find situations where a customer who's a first-time user of banking services puts 100,000 in the bank. A month later, they can't get 100,000 out, they can only get 95,000. And then the trust is lost because I gave you my money, I was looking after it very well. After giving it to you, it's now reducing. So who's taking my money? And then there's the other factor of driving digital financial solutions versus bringing the financial service providers along. What do I mean by this? You have a lot of technologies coming to the forefront, a lot of innovations, a lot of startups, big ideas in terms of what technology and the internet can do. But on the back end, you're not getting the same rate of graduates coming out of universities or colleges with the skills that enable for proper data analytics or data science, being able to do the analytics that make the technology make sense, that can support those transactions, that can ensure that the systems are there tomorrow, that in case anything goes wrong, if it's a key man risk, for example, where the innovator, the man behind the startup or the woman behind the startup is not there anymore, they have moved on to other endeavors, that startup can continue to provide services to the general public. Because sustainability, again, requires that you have enough skills to be able to continue to provide the service that you've started today. And that means there's a lot of capacity building that needs to happen on the back end of the innovations that we need to drive a digital economy. So education is part and parcel of that process. So I think these are not so much hindrances, but they're opportunities to look at in order to accelerate. Those are my thoughts.
Thanks, Patrick. Irene, you wanted to say something?
Yes, I mean, picking up from what Patrick just said, the opportunity is massive. And what makes it even more interesting is the adoption of the mobile phone in a country like Tanzania. We're also seeing interoperability and opportunities, where banks and telecoms, are looking to partner with innovators, which is the only way, to really create the disruption that's needed. I will speak from a consumer perspective. My experience, for example, rolling out Ecobar, there is a lot of training and capacity building that needs to take place, because yes, you could have designed something that is enhancing an existing pattern, but people still need to be trained, and there's a lot of education that needs to take place to change mindsets and behavior, and to also sell the value. Yeah, you could have designed something wonderful, and all the value is right there staring on your face, but you still need to run a lot of education, capacity building, train trainers who train the trainers. I mean, even if you look at the adoption of mobile money, there was a lot of capacity building that needed to take place. But now most of us are leveraging off that, but still we need to do a lot of that, and it's expensive to run capacity building, because the cost of conversion is quite high, which is where partnerships are very important. I always say, there's Patrick, and we're all targeting Patrick. The bank is targeting Patrick. The telecom is targeting Patrick. Everybody's targeting Patrick. If we can all gather around Patrick and come up together and create value for Patrick, then it will lower the cost of conversion. And another thing is, I feel like, and I'm so glad Dr. Mungongo is here, because I also feel there's still a lot of policies and that needs to take place to support disruptions, especially on the fintech side of things. And I understand, the risks are higher. So there's a lot of work that needs to happen, but I think it's time, especially, when you look at a market like Tanzania, where there is still a lot of people in the informal sector, there could be opportunities for things like crowdfunding, for things, how do I put it? So, because fintech is there to bring disruption, but there's a little bit of stagnation, because we only know this much. We only know normal banking models. Telecoms came, and it's been a learning process. We still need to learn and adopt and create conducive policies that will support disruptions.
Thank you so much, Irene. And we're going to have your wishes answered, because we're going to create a wish list in the end of the many things that we think could change in terms of policy and regulations. And yes, innovation cannot really be regulated, because then you're killing the whole art of innovation. It's supposed to be testing out, trying, iterating, pivoting, restarting again. Now, how do we ensure that there are policies that are agile and looking into innovations in the same way that the actual innovators do actually look at them as well? So I want to quickly go to Jalal. Thank you so much for joining us. You also could quickly introduce yourself, but also from your perspective, what are these gaps and levers that are stopping us from advancing towards the digital financing ecosystem?
Thank you, Dan, for the opportunity to speak. And hello, everyone, to the audience and to the respected panelists as well. As Irene and Patrick, shed some light, I think it is the whole ecosystem which needs to, upgrade and get educated. And definitely, the trust will come once the whole, the ecosystem, every stakeholder in that ecosystem is educated appropriately. And you said innovation, and since we have, representative of the regulation as well, regulator as well, I understand that, there is a word called disciplined innovation, basically. So this is also one thing which we should also look at. And what microfinance sector as a whole, I can speak from Finca's point of view, from the sector's point of view, is definitely there is a big disruption going on at the moment. And, our business model is completely shifting, and it is, if we don't, follow the change, we would be drifting away from the market, basically, because then we would not be able to catch the flow, basically. So what we are doing at the moment is trying to change that mindset at all levels within the organization, and within, not even within the organization, but at the governance level as well, because people come from a traditional microfinancing mindset, which has very little to do with the technologies. But now, Fikia being a very progressive microfinance institution in Tanzania, and we've been working, as part of my introduction, Fikia Tanzania has been in the country for the past 23 years, and I am the deputy CEO of Fikia Microfinance Bank Tanzania. I came to this lovely country 1 year ago, actually, and it's been an amazing experience so far. I am completely surprised by the way how advanced technologically this country has been, and I think hats off to all the enablers who have done this. But I think there is still, as you said, there is still a fight which is going on, that you have to change the soul of the organization as well. You have to embrace the technologies within that set parameters of discipline, and you need to see how you can, in the end, increase the financial inclusion, increase the well-being of our end customers, to whom we are striving every day to serve the financial services. So I think it's a lot of opportunities. If we can get this, opportunity right in a disciplined manner, we can attain a low cost of service, basically. Yeah.
Thank you so much. And you said it best that the whole ecosystem needs an upgrade to keep up with the speed of disruptions. And I think you said it best. Ben, do you want to go next with another question? We also have quite a few in the Q&A section, but we'll pause them later on, maybe in the next 10 minutes. But please go ahead, Ben.
Thank you, Diana, and thank you, panelists, for your insightful responses. In order to have any successful adoption, there has to be an incentive. And I think we can see even with the introduction of mobile money in the country, there are a lot of incentives with using mobile money. You don't have to wait in the bank for those long queues. There are no working hours. If you missed at 4 p.m., you can still transact. And of course, with the internet, one of the major incentives is speed. Is that I can access what I need to access, I can do what I need to do quickly. So as we're talking about digital finance, one of the major demands is immediacy of service, especially when it comes to payments and access to credit or loans. If I am going to do a transaction, I want it to be done quickly. And I think mobile money has done that very successfully. You can send payment and instantly somebody receives the money, but the sense of immediacy doesn't seem to resonate so much with the banks and microfinances, especially when it comes to transactions and access to credit. It's a long process. There's a lot of waiting, especially when you do cross-platforms or cross-banking or outside the country. There's that lack of immediacy, lack of speed. So I guess the question is, how can banks and microfinances, how can they meet this demand and this need for immediacy? Because again, that's the incentive we want as we're migrating to the digital space. How can you meet that need for the consumers? What needs to be done? And this is to piggyback what Patrick had said, a while back about, again, speed. And so maybe Patrick, you can speak from TIOB's point of view, and Dr. Emmanuel, maybe you can speak from BOTs, because I know you guys approve these payments. They have to go through BOT. So how does that look like? What can be done to increase this rate of speed when it comes to transactions, which means making payments or sending money, and accessing credit as well from a bank's point of view? And of course, Ecobar and Fikia, what are you doing? And if you're facing these challenges, what would help you meet this demand and this need that consumers have, so that we can actually increase the rate of adoption as well? Because if there's immediacy, if there's speed, people will just jump on board as they did with mobile money. Asanteni.
Thanks very much, Ben. With Doctor's permission, I think it would be good for me to just add on a little bit to what I was saying earlier. And I think this comes to now the banking system of transacting in terms of vis-a-vis the speed that you now see in terms of some of the transactions that are running on telco networks. If you look at banking as an operation, as run by licensed financial institutions, there are quite a number of factors that play into a transaction that is, for example, cross-border. You have treaties that help monitor, things like financing terrorism and monitoring of transactions that move cross-border, bearing on the bank to ensure that they identify who the beneficiary of the funds is before the funds, get to where they're going, to ensure that they're not proliferating finance to the wrong hands. There's money laundering regulations, guidelines, which are global, also part of treaties. And bankers that actually service those transactions have to be very wary, because the part of the requirements of the license is that there's compliance for these factors. The advantages that telcos might have is that you find that there's opportunities for partnerships with global companies that aggregate and process payments. World Remit, and remittance payment remittance companies that are technologically capable of having enough footprint to be able to monitor transactions at a cross-border level, specifically built for remittances. So you might find those transactions a bit more efficient because you have a whole entity that is focused specifically on those type of transactions, vis-a-vis a bank that has a diversity of transactions. And I think those are elements that can be addressed in terms of improving efficiency. There's a number of developments that are coming up in Tanzania. We only recently now, in the last 5 years, we've started rolling out our national identification cards and numbers, which are improving the speed of service that we get from banks. Similarly, in terms of credit, access to credit, my view is that the issue, so much so for banks, is that there's a lot of NPLs right now. We've got a number of loans that are out there, whether on mobile or physically, actual facilities in bank accounts that are not being paid. A good example is a telco loan on M-Pesa or Tigo Pesa or whichever network. Might stay a week or two before someone loads their account, and then the same is deducted. So we have to develop the capacity, the financial literacy, to appreciate the value of credit and how it affects pricing. We have to look at initiatives where we can incentivize learning, or rather reward learning and the acquisition of knowledge of the consumer. Encourage the consumer to learn by rewarding them. A good example is when M-Pesa first rolled out in 2008. There were a lot of reward systems tied to transactions, like send money on this network, you get a reward in terms of a bonus, in terms of minutes, in terms of data, and so forth. And therefore, after that, customers started learning how to compare the benefits they get from different providers, and where they're getting pains in terms of additional fees, additional penalties, vis-a-vis where can they get a more efficient, more speedy transaction. So I think there are certain interventions that can be done to promote learning, but I think education is key. And there are certain interventions that are already in the pipeline. Perhaps it's good to look at policy as well. Thanks.
Asante, Patrick. Dr. Emmanuel, maybe you can go next and
share
with us the point of view from BOD.
Yeah, thank you. First of all, I'd like to emphasize that the role of regulator is to promote or to sustain trust, because financial service operates on trust. Whether it's mobile, it's digital financial services, or it's brick and mortar, trust is very critical. That's why in developing the ecosystem, sustainability of this innovation, this momentum, will depend on trust. That's why it's very critical for regulators to put in place adequate regulations for both the stability of the suppliers, of the financial service providers, and to protect consumer, to consider the demand side of financial services. Having said that, I'd also like to point out that there are a number of initiatives around the promotion of or improvement of payments efficiency. Even now, there is a project trying to enhance interoperability, but since this meeting is being attended or with viewers who are in the startup space, we should also consider about the products, because the focus, if you look closely, we are focusing on transactions, but we need to move beyond the payments. The technology, digital payment, if it is to support the economy, it must come up with appropriate products, whether it's for agriculture, it's for SMEs, it's for service providers. I think we should now move beyond the transaction efficiency to move towards creating appropriate products. Just like these guys who are offering off-grid power solution by paying by digital payments. This is a solution. You're providing solar energy supported by digital platform. So we need more of that across various segments of the economy. Yeah, that's all. That's what I thought I should share, particularly to encourage those guys who are thinking about creating products. Yes, we have done a lot of progress in terms of speed, in terms of transaction efficiency, but we now need appropriate products across various economic segments. Thank you.
Thank you, Dr. Emmanuel. Wandeche Karibu, would like to hear your point of view.
Asante, Ben. I agree with Dr. Emmanuel, especially what he said with trust. If you can give all these incentives via the bank, but yet the consumer does not trust the bank or the financial services that they give, then it's not effective. So as much as we focus on the incentives, which is very important, but from the consumer's aspect, I think banks should concentrate from the security aspects and from the trust aspect when giving these services. So that's just I was just agreeing with Dr. Emmanuel with that part in terms of incentives. Thank you.
Asante. And I think to our audience, if you have any questions to any of our panelists, you can just type on the chat, and in a few minutes, I think I will start asking them your questions. Irene, maybe you can share also your take on this.
Yes, no, Dr. Emmanuel couldn't have said it more right. We need to be very product focused, because with the right products, the transactions will take place, and that's the whole point about a digital economy. There will come a time when it will become the economy, because everything will be digitized. For me, I would just like to point out, what a massive opportunity there is in community savings platforms, and the opportunity is in data. There is so much data, and I'm so glad to see our country spearheading with the new microfinance bill, the KYC for savings groups, which is very important. Now, the next level is how do we create more ways to have an overview of the savings economy. And that is what we're doing with Ecobar, where, not only are we providing a solution where community savings groups can onboard themselves and they can do everything on the platform, but also accessibility of data collection, and driving more opportunities for people to give data that is meaningful. So with savings groups, the savings economy itself is de-risked, because it's people who know each other. They can vouch for each other. They're already lending to each other. So having visibility of this and having credit scoring that already supports existing patterns. When you bring in banks, or when you bring in micro lenders, they're able to lend intelligently and to lend, with data. They know that Ben has saved this much. He's been accessing these many loans. This is how he pays. This is what he's doing on the marketplace. And this is, so your digital footprint supports how you access even bigger financing. So I'm happy to see some initiatives that are going on, where our government is looking into savings group, but I think there is more that needs to be done. I would like to encourage banks and micro lenders, to work with fintechs who are innovating around community savings groups, but also from a macro perspective, the government, finding ways that, they can have visibility of daily transactions, daily happenings within the savings economy.
Asante, Irene, and in fact, I think you've mentioned something quite important when it comes to credit scoring, and how can we develop digital solutions to actually solve that problem, because I think one of the major issues with accessing finance is data. We don't really know, we don't know you. There's no digital footprint that shows us whether or not we can trust you and give you this money. So what can we do in the digital space to solve that problem? It goes back to what Dr. Emmanuel said about developing solutions. So we'll talk about that a bit later. But for now, Jalil, maybe you can chip in your point of view from Finka's point of view. Karibu.
Yeah, thank you, Ben. I really wanted to talk about this because this is a very, like close to heart discussion, which is access to finance, and what Finca or other microfinance institutions in the country can do. Like in 2016, somewhere, or even later in 2015, we started to automate our processes inside of the organization to enable the access of finance. Because when we talk about the microfinancing, the most important thing for the customer, for the client, is the turnaround time. How fast you can serve, serving one, and then how fast you can serve. And this is, technology has made it possible to serve within the day, basically. So some of the clients we do serve within the day, maximum 48 hours. And how do we do this? Because all our sales agents are having tablets in their hands, actually, so they can go to the field, they can meet the client then and there, and they can fill all the application. At that spot, they can even check with the credit reference bureaus, they can check with the NIDA, they can do all these things. And we have a centralized underwriting unit at the head office. It is a push notification. They get a notification that an application has been submitted. They can review and analyze that application. And within the span of 1 hour time or 2 hours time, since the application is being created, they can, provide a credit decision. And this is what technology has enabled, faster an hour turnaround time. So access to finance is one, but, delivering that service is the second, which has, accelerated quite tremendously. And since many of the microfinance institutions are now looking at and already have automated their processes, the next step would be how do you deliver that service digitally, basically, the digital service delivery platforms, whether it is client acquisition. And this is where the the partnership with the fintechs comes in, basically, because they have the data points on the clients, and a microfinance institution can gather those data points, can run the credit scoring, and then can automatically generate. We are running a couple of projects with the telecom with one of the telecom companies, where we are giving overdraft loans and some term loans as well, completely through a digital ecosystem. And we are in a month we reach out to more than 20,000-30,000 clients, basically, through digital platform. And the end-to-end lending process is through digital platforms. They get loan through a digital platform and then repay through delivery channels. So and also one thing I would like to tell is that we have 19 branches, brick and mortar branches in the remote areas of the country, but 80% of our transactions are happening through delivery, alternate delivery channels, which are agencies, our agents in the field, which are mobile money. So imagine like 83%, 85% of the transactions in a month are happening through delivery channels, basically, which are so crucial right now, instead of people coming to a branch, actually, and doing those transactions. So I think it's an encouraging sign, and as we move on, we need to further develop that. Thank you.
Yeah. Thank you so much, everyone. And the chat section or the Q&A section is overpowering with questions. So Irene, brace yourself. This is just your fair warned. There's lots of questions coming over to your way. But I know that Dr. Emmanuel is going to be stepping out soon. So I just wanted to make sure I'm giving him an opportunity to also share his final remarks. Madeline, thank you so much. You know how I'm very passionate about ecosystem partnerships building. So I see you've already hinted on this already being an amazing panel. Why not take up a pilot of some sort where you start working on a specific solution and maybe track it over time. And really, I'm quite curious to you, Dr. Emmanuel, of course, from the BOT's point of view. How can we enhance partnerships for financial inclusion? Are there any partnerships that you already see happening in the country that have really maybe proved to be successful in the way they deliver solutions in terms of the digital finances, but also really creating that business case? How can we enhance partnerships, private sector, vis-a-vis public sector, or innovators vis-a-vis the public sector? How do we enhance partnership and collaboration to drive together towards a financially inclusive country?
Yeah, thank you very much, Dana. I think I'd like to refer to the National Financial Sector Development Master Plan, which recognizes the need for accelerated innovation in order to achieve inclusive financial sector development. And one of the pillars of this master plan is innovation, research and innovation. And in that, one of the activity or initiative which will be undertaken to support that is to develop an explicit framework for fintech, particularly sandbox. There is this concept of sandbox where innovators, fintechs can get the environment where they can develop products. So one of the requirements outlined in this master plan is to have a formalized arrangement for sandboxes. So I think, and the innovation nowadays, not only in the digital space, even in other areas, is more of co-innovation. It's collaborative. You look at the big companies, either they acquire other companies which have already innovated, or they outsource, or they collaborate. So the issue of collaboration is key, particularly with the growing complexity of solutions. It's very difficult for one organization to complete the innovation cycle by itself. So in Tanzania, there is this framework which is supporting that kind of direction.
Okay, I love that you're already speaking about the innovation language, sandboxes. We don't hear that quite often from the government space, and it's interesting to hear. So as a follow-up question, I would like to know, when is that expected to start? And then we have a final question for you, I believe from a participant here, who is saying, are there any plans for BOT, together with the Ministry of Finance, to come up with a bill or regulation for fintech sectors so as to nurture and protect fintech startups? Because without this in place, it is and will continue to be extremely difficult to come up with new products as everyone craves for. So that's a question for you, and then we'll let you go.
Okay, thank you. I think, as I pointed out, the master plan recognizes a need for formalized arrangements to support innovation. So there'll be a number of studies to be conducted to look at the ecosystem, identify the gaps. But one of the immediate recommendation is a need for putting a formalized arrangement for fintechs, particularly working through sandboxes and other arrangements, to spur their innovation momentum. So in principle, the government, through this master plan, has arrangements in place. And this master plan will be operational from next financial year, so 2021-22. So people are now in the drawing boards to draw out the action plans to implement this, and through, for example, financial service providers, through their associations, they were involved in drafting this document. And likewise, in the implementation, there are some working groups which are in place where financial service providers, through the associations, will interface with the regulators and the relevant ministries to support the innovation journey.
Yeah. No, thank you so much. And well, 6 months from now, it would be amazing to sit back here and say and track the changes that have happened in terms of this framework that you've mentioned. But just as a take home, I'm just giving you some leftovers that you can carry home with you. There is a comment that registration fee for a short code for TCRA is $2,000. You cannot access any service using USSD code without that code. And we all know that most of emerging technologies are brought to life by startups and individual experts and innovators who, for the most part, in a Tanzanian context simply cannot afford the fees. How do we make it possible for these groups of experts to have access to the short codes that in turn gives them access to the 104 trillion worth market in Tanzania? So that's just something really, how do we contextualize to meet the innovators, the local innovators that we have, who can hardly have such a huge amount to set up anything or start up anything. So this is just your take home, and we will be following up, trust me, in our next conversation to track where the sandbox or working group has reached, and if there's also room for more partners to come in. Thank you so much, Dr. Emmanuel, and now we will relieve you from the panel.
Okay, thank you very much indeed.
Okay.
All the best. Okay.
Thank you. Can we do a stretch? Then we have questions from Lillian McCauley. We have lots of other questions from the Q&A section, but I would want us to just take some sort of a stretch. Ben, can you, do you know how to lead us through a stretch, or we just do that or stand, or I don't know. Irene, you look like you're really good at power yoga and stuff on.
Maybe we should do a tree pause.
We should. Do we stand up or we stay seated? How does that go?
Are you going to make me do this?
Yes.
Well, I'm a dancer. Perhaps you can play music and everybody can start dancing.
Okay, what's your favorite?
Patrick, what's your favorite?
Well, I suppose we could just do arm stretches and neck stretches.
Okay. You want to lead us through that, Patrick?
All right, fine. We'll start with neck stretches. We'll get everyone to look to their left. Your left is this side, so hands down on your lap. Look straight to your left, your shoulders pointing forward. All right, count to 5, 2, 3, 4, 5. Look to the other way, the right. Count to 5, 2, 3, 4, 5. Look back left. 2, 3, 4, 5. Look right. 2, 3, 4, 5. Okay, now put your palms forward like this. Okay. Take your left hand and place it across the other palm and pull it back towards your elbow as you stretch your arm forward like this. Okay. All right, count to 5, 2, 3, 4, 5. Turn it over and pull it back to your elbow. 2, 3, 4, 5. Do the same thing to the other hand. Yeah, pull it back to your elbow. 2, 3, 4, 5. Turn it over. Arm straight. Pull it back to your elbow. 2, 3, 4, 5. Now, can everybody hug themselves? And I want you to do a swing from left to right, okay? Like this. As you pull yourself to the other direction. As you swing, pull yourself to that direction. Okay? Do you feel nice and warm?
Yes, we do. And you're so good at this. Yeah, I will definitely sign up, Patrick. So do send me the flyer when the session is done. I'll sign up to your yoga session.
Thanks.
So thank you so much, Patrick. So quickly moving into the questions from the Q&A section. And I would like you panelists to respond to each of them as fast as you can, like quickly. Whenever I raise this red ticket, just know your time is up and then you need to step back. So questions to Irene are, I'm curious to know if Ecobar is anyhow similar to TPB Bank Mcobar platform. to what extent does Ecobar digitize customers' information? And then another one is how do we deal with and communicate about consumer protection? A lot of people in Tanzania are worried about data safety. So this is a question for everyone. And then another one is just trying to look over here. I understand that you digitize community saving groups for you, Irene. Does the platform of Ecobar also facilitate interaction with external service providers? So 2 questions for Irene, and then another more general one is how do we deal with and communicate about consumer protection to everyone? So we start with you, Irene, and then everyone else will respond in just 1 minute what they think is their take on the question.
Okay, thank you. So thank you for those questions. So just a brief overview of how Ecobar works. So basically, and this will highlight the difference between Ecobar and Cobar and similar products on the market. We spent 3 years researching community savings groups just to understand their nuances and what the issues they're facing. And one of the issues was obviously digital footprint. Second issue was access to finance, because they're as strong as the amount of money that they save within their group, which most times is not enough. And they cannot access more financing from beyond that, because again, they're not bankable, there's no reference, they don't have a credit score. And then the other issue is, they cannot increase productivity, which means they cannot increase their savings. So how do we give them access to markets, access to capacity building, so that they also can increase their productivity, save more money, and create wealth for themselves? So how the platform works is, digitizing what is happening. So group members KYCs, and then they do all the transactions on the platform, so wherever they're saving their money, whether it's on mobile wallets or banks, and with time, they can also put their products and services on the marketplace. So we're able to see the movement of money from their savings to how they lend to each other, their lending their payment patterns, what they sell on the marketplace. And then we will start seeing with enough data, the different value chains that most of them are focused on. And then we're able to invite third-party service providers, whether it's banks or health insurers, pension insurers, to bring more value into this, which is actually what we're doing. In Tanzania, we're rolling out Ecobar in partnership with Sanlam, who have a very good group life product, that we're offering the members. But here in Kenya, we've partnered with Family Bank, who are opening bank accounts for the members of groups that don't have bank accounts. And then with time, they're able to lend intelligently into the different saving groups. So yes, it is built to actually accommodate different value providers, but our selling point or our unique value proposition is savings groups. So whatever lending that you will do, whether it's targeting individuals, it has to go through the group so that we can maintain the group trust protocols that are already in existence.
Thank you so much for powering through all the responses, Irene. And for the rest of the colleagues, could you take on the other question?
Yeah, sure. So data safety versus consumer protection. I think, yes, concern is there. Data safety is an issue. Consumer protection is an area where we see that there have been efforts at a policy level to tackle. We have consumer protection regulations that include a specific channel for complaints and consultations at the central bank. These are being improved as time goes, as we understand better the cybersecurity risks that become more and more prevalent, such that you might find that, with time, the penalties for consumer protection compliance issues might change as the understanding improves. At the same time, data safety continues to be an issue. Cybersecurity is a problem because With new technologies, intruders gain, a higher level of expertise. It has been said to be a growing industry, a multi-billion-dollar industry, global industry at that, in the sense that it has, cross-border reach, and people actually have created a career out of it globally in terms of, the cybersecurity aspects of attacking financial institutions, and various institutions that hold consumer data. What is being leveraged is, or rather what is being done about it is efforts to educate consumers in that there are benefits that outweigh the risks of the usage of digital financial solutions. In that if you want access to market, access to information, access to service providers and suppliers, access to support services that you need to grow your business, digital technology is the way to go. To be left out of it is to lock yourself out of, the potential to grow your business at the pace that you want. With that comes risks, but if you gain enough knowledge in terms of how to look after yourself, in terms of protecting your data, what are the steps you can take? And this is consumer education. And it's part of the consumer protection efforts that are being done by, policymakers and also the private sector as well. At TIOB, we are looking at this in terms of the education programs that we provide the financial intermediaries that are our members. We educate bankers, financial service providers, lenders in terms of how, banking and financial service operations, protection of data, how best to improve their analytical skills to understand what might have gone wrong from the data itself and how to correct it. So we are pushing digital skills as an initiative as well. And we're looking to enhance that in our financial intermediaries because as we speak, we've got a number of technologies that are out there that are improving, access to credit and payments. But if you look within institutions that are providing these services, they've got great technologies, but the staff that are actually empowered to be able to, or they have the capacity to understand these technologies and to manage them are few. You find that knowledge is very much inherent in the management structure, but within the technical level, very few are actually technically savvy. Thanks.
Thank you so much, Patrick. Yes, so swiftly moving on to, I do believe that both Irene and Patrick have exhausted this one. Marilyn did put a suggestion here, and this we'll tease around and see how we can take it home at the end of the day, that she would like to ask this group to formulate concrete next steps, a joint pilot or sandbox of some sort that HDIF, so that's the Human Development Innovation Fund, who have organized the Innovation Week from which this session is being hosted, so that HDIF can feature you as a commitment for the coming period. And I think this is a very rich, diverse group. We have Patrick from the Tanzania Institute of Bankers. We have a rep from the microfinance, who better to be here than Fikia. We have someone representing the Ecobar, which have long-standing history of working with people in the informal sector. And this is very rich. And then you have a trader who has an appetite to convene. So I think this is something that you keep reflecting on, and maybe close to the end, we can think about how to progress from here on in terms of your commitment as a panel to move the needle towards more strengthened ecosystem partnership strengthening towards financial inclusion. And I'll hand it over now to Ben.
Asante, Dan, and thank you to our panelists for such insight. I think to build on to the last question that was directed towards Dr. Emmanuel before he left, and you had mentioned context. I think we have a major challenge when it comes to taking into account the diverse contexts that people come from. Now, to talk about digital finance, and Irene had mentioned credit scoring, I think, access to finance, context plays a huge role. I think when we talk about financial inclusion, a lot of the people who are left out in the financial ecosystem sometimes it's because their context is not taken into account when people are developing products. And so I think an example of this would be if you want to access a loan, you would have to, provide certain collateral assets as collateral, and banks would prefer immovable assets, your land or your employment contract. But if, say, someone has, movable assets, like you have a cow, say there's a woman in the village who has a cow or a goat, it's an asset, it's immovable. I mean, of course, the cow might die, but that's an asset that they own. So how do you take into account that context? Because when we talk about inclusion, then we can't ignore context. We can't exclude certain contexts. We have to think and innovate products that actually meet this need. And I think this whole, as we're talking about this whole sandbox mindset, holding hands of people. I think I was talking to Patrick yesterday, and said, this whole idea of holding someone's hand up until a point where they are strong enough to run. So the question is, what would it take for people who work in the private sector? I think we have Irene here or Jalal. What would it take? And I think Patrick, you can speak on this as well, and Mundesha can speak on this in terms of best practices out there and the research that you've come across. What would it take for people, diverse contexts to be taken into account when institutions are designing products, be it especially in the area of credit? Because I think that's when a lot of the exclusion happens. It's access to financing. So whether it's individual, whether it's startup businesses, what would it take for institutions to actually design context-specific products that help people, especially those who are not at a stage where they can fully run? Sante.
Thanks, Ben. My view on this is there's that we've made strides in terms of what we've been able to achieve in terms of the infrastructures and the channels and the services that are currently available. I mean, Jalal illustrated very well in terms of the adoption of technology and how to reduce the turnaround times for access to credit for customers who are actually qualify for certain lines of credit. But still you find that there are challenges in terms of access to those solutions. Why? Because a bit of research might indicate that there's limited understanding of what a credit score is and why it's important. There's limited understanding of why of credit history or banking history, having history in terms of some form of financial record of your financial life, and this requires a certain level of education. I gave the example earlier of the first mobile wallet solution that came into Tanzania in 2008, incentivizing and recognizing good transactional behavior, encouraging more transactions by giving rewards. And I think this model is something that grew mobile transactions very quickly. In a matter of a year, we had more than 100 million in terms of transactions. Number of transactions, value came to about 1 trillion. So I think there's room to consider education, recognition of the right behaviors that are going to capitalize on the infrastructure that's already been built. The biggest challenge that maybe Fikia might have is they're trying to give cheaper loans, but they have to do that on the back of NPLs in the industry. I mean, the average NPLs in the industry, the guideline is 5% right now. And this is the recommendation from the central bank. So how do we now incentivize the right behaviors to help the market adjust to lower default rates so that they can make room for others to borrow at a more cheaper price? So that's one angle. And that is, for me, it's quite significant because credit is what drives the economy. We are digitizing this economy, but at the end of the day, the economic growth is by extending the right capital to the right businesses to enable economic growth. Other ways is through financial markets. There was a time we were looking at the capital markets where financial products such as micro bonds, municipal bonds to enable localities to bring about projects that might boost economic activity in those areas. I think these conversations are important to have because they would sustain the digital financial interventions that we're looking at. Yeah.
Jalal, do you want to go next? Yeah.
Yes, I do want to add. Thank you, Patrick and Ben, also for this discussion. I think, as I said in the beginning, that it is a fight within, basically. So first we have to convince ourselves that data scoring, or the only on data on the behavioral sciences, is making a sense, and it has, at least for us, it has proved to have a reasonable comfort level, for example. So when you go back to the traditional, I understand at a certain amount of a loan or a credit, you do need an immovable property to have some security, and definitely, as I said in the beginning also, a disciplined approach, from the sake of regulators, from the sake of everyone. But I think this is where microfinancing and what Irene is doing, for example, or other fintechs, it comes in handy, is that we do very low ticket sizes, basically. So you can't ask for a $300 loan to have an immovable property anyway, basically. So what do you do is that you strengthen your algorithm. You see that how the credit decisioning is taking all these parameters into account, and then you run it into a sandbox, you run it into a pilot basis, and ultimately you launch it commercially, because once you have satisfied yourself, your stakeholders, and other people who are in the the game, basically, that this scoring model or these data points are credit worthy enough, basically. So yeah, I think to play, to enable ourselves that data plays an important role, it starts from within, basically. And so you digitize your processes, you bank on them, and then you wait and see how the product performs, basically. And I think, yeah, this is the way it has to, and that's what Finca does, actually. In when we launch a product, almost half of our product right now don't require any immovable property at all, actually, because that's not the aim of a microfinancing organization or someone who is interested in that niche where people don't have immovable property to get a loan of $500, for example. So yeah. Thank you.
Thank you, Jalal. And yeah, kudos to Finca. Mwendeche, maybe you can share also your take on this. Karibu, Mwendeche.
So I think Wendeche is having some technical problems. We'll see if we can get her back.
Okay. Irene, maybe you can go next. Karibu.
Sorry, I think I missed the last question. Can you please?
Sure. Basically, we were talking about financial inclusion, and especially in the aspect of credit and accessing financing, where now there's the preferred model, at least from the public's point of view, and of course in the financial sector, is that banks or microfinances prefer immovable assets, as collateral for financing. And of course, as soon as that's the criteria, then you're excluding a large portion of the population, especially women and young people. So how do you, if we talk about inclusion, then we have to consider all the different contexts. So how can we design, what would it take for people who work in solving this problem of access to financing and providing credit? What would it take for for institutions to come up with products that are context specific, that takes into account the fact that, there's a woman, let's say in Karatu, who doesn't have a land, she doesn't have a house, maybe all that is owned by the husband, or maybe she doesn't even have a husband, but she has a cow, she has a goat, and she has mobile money. You can see her transaction there, which we'll talk about credit scoring. So what would it take for people who work in this sector to design products? What would it take for them to unlock this, exclusion that's already there, so that we can be more inclusive? Karibu.
Okay, thank you. That's a very good question. And for me, I think it takes access to relevant data which is there. So designing or coming up with more options to collect data points from such women, and centralizing those data points and creating credit score that is relevant, because if you ask me, and maybe Patrick can speak more about it, like what is a credit score made of, So we need to also reimagine, the future of credit scoring, what other elements beyond financial transactions can we factor in? We are social human beings. We are social beings. We have other activities that revolve around our lifestyles. How can we get access to that information so that we design the right credit scoring? And we think we are cracking it with Ecobar because, not only are we recording transactions, we are monitoring how people save and access loans and how they pay. We also are monitoring how they learn on the platform because it has a capacity building module where different players can bring in content, so how a person interacts with that information. We're monitoring what they're selling and accessing on a marketplace because it has a digital marketplace. We're monitoring also how they attend meetings because savings groups is also social activities, So designing new ways to build credit scoring that are relevant, that includes activities that surrounds that person. And digitization and collaboration is the way to do it, because how do you get access to all those different data points?
Thank you so much. Actually, I think that's a very good point in terms of agreeing on a model that we use. I think in the West, they use the FICO model, where 90% of the players in the credit industry use that model to sort of like measure and see who qualifies for what. So I think, yeah, it goes back to that access to information. I think if there is a model, then how do we make sure that people are literate, in regards to that model, people know about it so that people can make the right decisions to build up their credit score as well. So yeah, thank you so much. And over to you, Dan.
Thanks, Ben. We had a hand in the chat, Oscar Ngitu. So maybe Andrew, if you can help me to unmute him and he can go ahead and shoot his question. If Oscar's still there, we would love to hear from you. Yeah, I see he's still online. Please go ahead and ask or comment or contribute. Yeah, I'm not sure he's off mute, but maybe the tech team can check that out. And then we have another question in the chat. How can this system help students, graduates who mostly don't have movable properties and access to most opportunities in terms of loans, etc.? I think that's what we've been trying to answer the last few minutes. So really around how we use data, how we gather data and interpret it, making observations, interpretations, and intervening with the right products and services. I think that has been fully answered. Lillian, you have your hand up, but I see Oscar is on video now, so I'm thinking he's able to talk. So Oscar, once you're done with the question, we will allow Lillian McCoy to speak as well. And then we also have a question from Marilyn, who says, is any of you using blockchain tech to allow more inclusiveness and ownership of data that are being collected? So that will go after the two members have shared what they have to say. Oscar, karibu. Yes, please go ahead.
Okay, thank you very much. I wanted to direct this question directly to Dr. Emmanuel, but unfortunately, you released him before I could. Maybe Patrick or Ben can help me out. I just wanted to know, from the perspective of Patrick, how do you go about these digital currencies? Because we have seen so many digital currencies arising, and recently there are Doge coins. I don't know if you have heard about them, but I do. You have heard about them. They are changing so many things in the digital innovations. Now, I do not know to what extent Tanzania is exploiting this kind of platform, because we have seen what Bitcoin has done to the world. I mean, it started as a very small thing, and yet right now you can't even buy one Bitcoin from a normal citizen. And I think from my perspective, if you invest in something like Dogecoin, which is rising very fast right now, it may be a game changer in the future. But I do not know exactly on how banking system in Tanzania is going about these kind of platforms, because everyone in most parts of the world, especially youth, are using this kind of platform to at least save what they can save, and then onwards, they can get what they can get. And honestly speaking, they get a lot. So I would love to know, maybe if Ben can help me, maybe if Patrick can help me in this perspective, where do we stand in this kind of digital innovations that most parts of the world are using it? And I don't think we are.
Thank you so much, Oscar. Now over to Lillian. So I guess, Patrick, you're going to be taking that. Lillian, please go ahead and ask your question.
Hi, good morning. So I wanted to ask this question to Doctor, but he already left, but it's more directed still to BOT, where, so I've co-founded a company called Mipango App. It's personal financial advice for users. But the big challenge that we're facing with banks is that they don't encourage data sharing to a centralized system that can enable users to, know how much balance I have in my bank account, how much balance I have in my M-Pesa, the whole ecosystem. In as much as customers are hungry for the solution, banks don't seem to be ready to share their data. Even if that means customers saying, okay, each time, like, yes, I've made this transaction, share this data with this app, they don't allow that. But in the more developed countries, they're already doing that. They've been doing that for years. So my question is BOT looking at a way to push banks to create APIs that enable users to centralize their data? Or is it a no-no even from a regulator perspective?
Thank you so much, Lillian. And of course, Lillian is one of the female serial innovators. So believe it when she asks a question. and maybe hence again, the need to you, Andrew, to really do a follow-up discussion where probably you bring BOT in the room and the different regulators, but also the different banking leaders, and they can dialogue alongside the innovators to see how to bring this home. Because there's still a lot to be unpacked, trust me, and then the time is not enough. So that's something maybe you can look into in the near future. And finally, I guess there's the question from Myoline, which all of you have seen, but then Patrick, you can take that on, and then you can react to what Myoline did share in the chat in terms of blockchain tech, and how can we allow more inclusiveness and ownership of this.
Thank you, Dana. And thank you, Oscar, for asking that question. My response would start from, the debate is scholar in nature, because digital currencies are, by all intents and purposes, still new. There are new ones coming up every day. There's Bitcoin that's been around for a number of years. What makes Dogecoin better than Bitcoin or more popular is it seems more like a popularity contest in terms of which one is more appealing and what does it promise. But the economics of digital currencies vis-a-vis the cash currency that we have as in USD versus Tanzanian shillings as media for exchange is, for me, it's supply and demand. The farmer, what do they have access to? And on what basis do we then digitize the way they transact? So number one, they harvest, they sell for cash. How do you make that cash appear in a mobile phone or in a bank account where they can see it through digital means and now start creating trust that the currency that they used to transact with, the value of their crop was X amount of shillings, they see the same value in their phone, and they're able to transact that same value for other goods which they're used to buying for a certain amount of money. We essentially, well, the argument here, or rather the scholar, the school of thought here is that you start from that level, you build trust from the consumer at that level, and then you diversify the services that they can adapt, that they can take up. So it used to be cash for crops, and then turns into insurance products, turns into education loans, turns into savings, turns into investment and wealth, growing their own personal wealth. And as you and as you improve the life of this farmer or this young person in Tanzania, who may have be coming from a point where they don't actually have a smartphone, they have access to an agency and a binary phone, which is just a USSD code. So once you get to that level of financial inclusion, then digital currencies become a more prevalent discussion in terms of what can they bring that we don't already have from the cash currencies that we have in play. From my understanding and from the general understanding is that digital currencies come from a point where convenience has already been achieved, and now we want something else. We want to be untethered from banks and their regulations. We want to be able to move money to Tokyo without anyone asking us what for, and that's where digital currencies come into play. Wealth building for young people who are playing around with digital currencies in terms of buying the currency and selling it later. Yes, there are speculative earnings that can be gained from buying digital currencies and selling them, but then now we're looking at a very at a context where people are trying to speculate in financial markets. It's not so much for sustainable development. So I think it's an ongoing debate. It still needs to grow. I believe we need to focus on the current local currencies that we have before we go into digital currencies, for the benefit of the economy at large. And those are just my 2 cents.
Thank you. And I think you've answered not just Oscar's question, but also to Marilyn. And I also do believe I don't think you've answered Lillian's question yet. Which we also then have another follow-up question. And it looks like, Patrick, you're sitting in on behalf of the BOT, because this question, I'm not sure Jalal or Irene will take it, but then please, if you can, that's very okay, is what is Tanzania's position in regards to decentralized finance and open banking?
Right. So this ties in with Lillian's question with regards to APIs and allowing people to access their personal information that the bank is holding in custody on third-party platforms such as personal financial management applications and so forth. Open banking is a new concept. My understanding, and I cannot speak with authority on this, but I can only base it on my understanding on the information that is out there. We don't really have a concrete standing on open banking in terms of open APIs for third-party entities to access personal information, because we're in terms, again, the economies of that. How many consumers actually use it? How many consumers actually have a significant need for it, in that it warrants a discussion at a policy level, and we're trying to build towards that. And I think Ecobar is one of those platforms, one of the few platforms that are actually, driving that in terms of that financial inclusion in the informal sector. And once you get that level of inclusion, where you're getting the diversity of services on the platform, you're getting the participants actually benefiting from it, and more turning up to want to use the platform. And you've got volumes, you've got hundreds of thousands, even millions of users on the platform. And they're asking with a resounding voice that we need to have access to our personal financial accounts on the platforms that we're using. And I think that's when open banking becomes more and more relevant. It's already there in more developed economies where it was more driven as a business offering rather than a need from a consumer. And I think it's a natural state of affairs that we will organically shift to that space. Sandboxing is something that the good Dr. Emmanuel mentioned, and I think this is something that can contribute to that. I think it's in our interest as players in this in the innovation space to create the necessary dialogue that's needed at the policy level to help the sandboxing become more effective, more efficient. That the testing of ideas become more more inclusive with the regulator, and that we're helping the regulator understand these innovations in as much as we're trying to understand them as well.
Thank you. Irene, Jalal, Mwendeche, you can also comment quickly on the same.
Yeah, no, I agree with what Patrick is saying. And the issue is, we have a very basic thing to sort first, digitizing communities. And then from then on, we can build on that. But it's things that we need to start exploring or prepare for. So what we've done on Ecobar, for example, is built on the blockchain technology for security, because blockchain is beyond just the trading and mining and the digital coins, but security, to enhance securities, to allow at a later stage for the users on the platform to decide how they want to use their data for their benefit. When we bring in insurers or when we bring in all these other value additions, one decides whether they want to give their data so they can access that, or give their data so that they can monetize from it, because that is the massive issue now with data. As a matter of fact, today here at Ada Labs, the company that designs all these solutions that we're launching out, we've launched the blockchain center, the Africa Blockchain Center, and we have the leading number 3, actually Cardano, the CEO of Cardano, the co-founder of Cardano, which they run Adacoin. It's the 3rd biggest cryptocurrency in the world. He's here visiting us, exploring how we can create blockchain solutions beyond trading, for governance, for agriculture, for, so these are conversations that we need to start having, but first we need to sort out or solve basic issues.
Thank you, and Jalal.
Thank you. Yeah, I'll quickly add my comments as well on a question of Lillian. And there was a question that, how can the fresh graduates who don't have immovable property can gain access to the credit actually? I think I have been, I know Mipango app, I have spoken to Lillian before as well, and I'll take this opportunity to say that I have downloaded this app, and it is a perfect starting point to get someone into a credit channel basically, So you do your data points, you start sharing your earning, you start sharing your spending habit, and that's enabling Mipango app to tell you that, this is where you lie actually, and these data can be monetized to the institutions basically, because client acquisition remains a big struggle for financial institutions, and if there is avenues available that they can provide a chunk of client who are credit worthy, why not? And then, question comes on the open banking and their policies around this. So I think that could be a short-term solution while we go around the regulators. And then quickly on, because I'm also a student of cryptocurrencies and blockchain technology, as Irene said, I think completely I agree that, the blockchain technology is there to stay, and it's there to revolutionize actually, and the only thing right now is that the crypto market is so speculative. There are influential people like Elon Musk, for example, steering away the whole market up and down, like Dogecoin. He has just put it, up to the moon, and so it's highly speculative, and that's where the regulators will not put their hands on. So it needs to be more streamlined. It needs to be more regulated before we can start utilizing those technologies, basically. So I think the platform of distributed ledger is there, and they could do wonders, basically. But we need to find a more energy efficient way to run this technology, because if you look at the Bitcoin, for example, how much energy it burns to just keep on adding these distributed ledgers, it's not sustainable. It's not for the climate actually, So yeah, that would be my take on this one.
Thank you all so much. And it feels like we have a satisfied attendee. So Lillian is saying yes. Thank you so much for being spot on with your responses. Ben has a final question, and then we'll give our key takeaways and we'll wrap this up.
Thank you, Diane, and thank you to our panelists for your insight, and Art and Daisy for your insight-seeking questions. So as we're talking about emerging technologies, we know that without a reliable infrastructure, scaling is near impossible. So we're talking about all of these things, but I think we can all admit that we have a serious digital infrastructure problem in our country. If you look at the level of smartphone penetration, it's quite low in comparison to markets that are booming in this space, like Nigeria or Kenya, for example. So knowing that, the USSD model has its own limitations. A lot of the stuff that if we fully depend on that, then how high we can grow and how much we can innovate, there are limitations. So we need people to use actual smart devices. So knowing that we have this issue of like a low penetration, and that's of course electricity comes into play. The price of these devices comes into play as well. So, but at the same time, it's going to pose serious limitations in terms of the penetration of these technologies and the adoption rate as well. What do all of you, I guess the panelists, Jalal, Patrick, Irene, Wandecha, if she's with us, what do you think needs to be done to increase this rate of penetration? What should the government do to open up so people can build this infrastructure, so they can play a role in building this infrastructure? What needs to be done on a policy level, maybe in terms of how they collaborate with the private sector? I mean, what needs to be done to make sure that the penetration rate of smart devices is quite high, access to internet is quite high, so that all these innovations we're talking about have an opportunity to actually scale and boom in the country?
So I'll be the first one, if with everyone's permission. So my thoughts are, I mean, the good Dr. Emmanuel mentioned that the Bank of Tanzania focuses on stability, and I think when we talk about stability, we it's like holding a sieve, a bowl to make sure that things don't fall apart, keeping things together. And that's one end of the scale of looking at things, things like putting speed bumps such as your NPL at 5%, your cost to income ratio at 55%, to help the banks maintain the right level of liquidity to be able to support the financial sector. That's one. But how do we then create initiatives, and with the help of the regulator, to look at the right innovations that meet the needs that our consumers have? And I think there are already some solutions that we are seeing in the industry, but still these solutions could move faster, could develop faster. And I think there are certain two elements that are missing. Number one is the incentive to participate. The consumer needs to be incentivized to participate. Once they are incentivized, they can pretty much learn for themselves. I mean, Ecobar already has a learning module. You might find, with the right incentives coming from a policy level down to the grassroots level, your Ecobar users might actually end up learning actively on their own, so that they can actually capitalize on these incentives. And I think the policymaker, the policy implementer, the central bank could put in place some incentives to banks and financial institutions where they can realize, positive behavior from, credit customers. So if Fikia has great, assets on their books, what are the rewards from a central bank aspect? Vis-a-vis, if you have high NPLs, what are the penalties? So match the good behavior with the poor behavior as well. And also to address skills gaps, and that's my last point, we have a high digital skills gap in Tanzania. Not enough people are knowledgeable about the digital solutions and how to use them and how to manage them. So you've got very few startups that are actually on point and that they know their stuff. We need more and more about, of that.
Irene, you go next, then Jalal. 1 minute maximum. We're already moving close to the top of the hour.
I would say, one of the big way to address the challenges that have been mentioned is also being proactive and strategic in solving these issues, because there's different players who are doing different things, and the challenge is everybody's working on a silo, so how do we sit together and design a proactive approach, to solve some of these issues, whether, even if it's to address one issue. And I would bring you guys back to community savings people who are massive, it's a massive population, and bring in collaborative efforts, to unlocking the potential within that, as a starting point.
Thank you. Breaking silos, which is already on my final recommendations as well. Over to you, Jalal.
No, Diana, I don't have much to share. In addition, just to stamp what Patrick and Irene said. Specifically, there is a question I see that poor people have complex financial lives, and how they can be ready for the to take part in the digital economy. I think Irene just touched it. There is a community savings program. We can digitize their savings habit. We can learn more about their financial well-being, and then this is where we can give them access to credit, actually. So I think we have a solution in our hand. It's just synergies and working together, basically.
Thank you. We'll take you on that. You said synergies. I did not say it. Irene said silos. I did not say it. Patrick said partnerships. It wasn't me. So it's each and every one of you craving to how do we work together and bring this home. And as I see it, Marilyn from HDIF is pretty interested in seeing you guys move forward as a united front. And it's very much possible. And she's also quite excellent in co-creations if you also need her magic somewhere. And I do believe that Andrew is going to kick this off maybe, and probably convene you in your next meeting to pilot something, a sandbox of some sort, that we can track 6 months down the road, come back into the same session and say, hey, what have you guys been working on as a collective? How have you strengthened your approaches since this meeting? And we're looking forward to learning from you. So in terms of my key takeaways from the session, they're not so far off from what you guys have just wrapped up with. I've seen that there's an appetite to enhance digital skills across, because as we're digitalizing, then there needs to be digital literacy as well that goes hand in hand, but also safety that comes along with it. I've also seen that our ecosystem, there's a lot of justifications of why we haven't adapted to Bitcoin. And I don't know why it should be a justification that we still continue to say we're nascent, we're getting there, but new technologies are coming on a daily basis. And if we're not agile to quickly jump on, then we're very much going to be left behind. So uptake for the new technologies already it shouldn't be the case. Then also appropriate contextualized products, right? How do we meet students who are still in university? How do we meet the needs of women very in deep? Don't have how or a got, and also have that transactional Okay, sorry, something just happened to me. I went off for a second. I do apologize. I think it's my connection. Am I still audible?
Yes. Yeah, we can hear you now.
Yes, you are. We can hear you.
Okay, something happened over there. I was just feeling like I was hacked. And then we also spoke about the sandbox approaches. Let's see how to take on this thing that Dr. Emmanuel mentioned from the government, because at times there's very good grand ambitions, but it also takes time to see them come to life. So again, as an ecosystem, as a collective, how do we then march back and say, hey, let's look at that framework. How can we help? How can we work together to test out something? And Irene spoke about digitizing communities, which, very much spot on. And then also an upgrade of the policies, right? To be more responsive and agile to new innovations and approaches such as open banking and whatnot. Really do want to appreciate everyone's inputs. And Andrew, I'll be looking forward to hearing you state what a next step is from here on, because we don't just invest in discussions, we invest in actionable steps going forward that we need to see. Over to you, Ben. Thanks.
Thank you so much, Diana, for that comprehensive summary of the discussion so far. And I think, the most important thing is what are the next steps? Because again, if all we do is talk, it's this effort and time we invested is futile. So I think, yes, I would definitely pass this on to Andrew so he can communicate to the rest of us. What are the next steps in terms so that we can have expectations and be alert on those next steps? Andrew, karibu, brother.
Thank you so much, Ben. Thank you, Diana, to the both of you for great moderation. This has been a really, really interesting discussion, and there are so many tangents to the digital economy. We started talking about cryptocurrency, Bitcoin. There's so many areas, and what that always means is that there's a lot of opportunity. One of the big concerns that have always been there for companies who are in the financial technology sector is that there's no regulation. There's no hard and fast rules that allow people to understand within what context they can actually launch their businesses and their solutions. And I think that's actually an opportunity because what it means is that we can actually shape that conversation and we can guide the regulators, we can guide TCRA, we can guide BOT in terms of creating that regulation, because essentially we are their target market, we are their customers. One of the key things is that I've found is that for banks, for the banking sector, they have an association, they have a voice that speaks for them. The microfinance sector, they have an association, they have several voices that speak on behalf of them. But for fintechs, which is now a huge part of the economy, there's not really an umbrella, there's not really a specific voice that speaks for fintechs. And I think that could be a starting point. I think if we can, I believe if we can come together, but specifically companies, startups working in the financial technology sector, somewhere between banking, not quite a bank, not quite a microfinance, but leveraging technology to really create solutions for the mass market, for most of the population, that could be a really, really important starting point. And I would like to kick that off with the people who are on this call and who we're having this panel discussion with, and anybody else who would like to join that as well. Please, you're very, very welcome. And I will be reaching out to all of you over the next few weeks, and we see how we can make that happen.
Thank you. And I guess over to you, Ben, to close us off. I don't know whether with a prayer or a smile.
Thank you, Diana. And I just want to express, sincere gratitude to everyone who participated, to our panelists. Jalal, thank you. Irene, thank you. Mundeche, I don't know if she's with us. Thank you, Mundeche. And Patrick and Dr. Emmanuel, who left, I think about an hour ago. And everyone who asked questions, who were texting on the chat. thank you so much. And I think as Andrew said, we'll be in touch, or he'll be in touch in the next few weeks to let us know. And I think we can hold him to that. And thank you, Diana, for for doing such a wonderful job in leading and aiding this conversation. Asante.
Thank you so much. Have a great day ahead.
It's been a pleasure. Thank you, everyone.
Thank you, everyone.
Thank you, everyone. Thank you.
Bye-bye.
Goodbye.
Thank you.
Bye-bye.
Marlon.